front-end rates may have topped if data is finally rolling over. So over the last 6 months, US rates have repriced materially higher, and rate cuts that were priced in for next year were priced out due to a more resilient economy and the higher for longer narrative that the Fed kept pushing and reiterating. Recent price action after the Fed acknowledged that the tightening in financial conditions from higher long-term yields as that term premium went up and the curve steepened again, that suggested that they were done hiking rates. They didn't need to keep raising short-term rates if the long end was going nuts the way it was. Okay, so that we think that the front end is probably more anchored now and is going to struggle to go above current levels at like 5.5%. Okay, so the 2-year yield topped out at around 5.25. That's come down to around 480, 485 now, and it's broken its uptrend. So the question is that now a turn in the 2-year? So even if the long end starts to go higher again next year, is the 2-year kind of going to stay around this 5% level and maybe even go lower at some point, but really struggle to break materially above? Now, looking at SOFR futures, which is those, used to be LIBOR, is now SOFR. If you look at how they've repriced in the last 6 months, obviously the red curve was where we were 6 months ago. We've had a dramatic fall everywhere, but really the December 24 area was the one that's fallen the most because that was pricing in the most cuts and all those cuts got taken out. So you can see the price action of that future. It's recently kind of bottomed out in the low 95s. It's had a little bit of a bounce, obviously in line with what's happened in 2-year rates. But the question for us is, has this thing bottomed, right? And therefore, has that 2-year rate topped? Now, we think that probably is the most likely scenario because we do think the macro data is starting to roll over and show signs that, that economic strength has kind of is done for now. So if that's the case, what sort of trade could we put on to benefit from a resurgence of these DEC 24 futures, and certainly that they're not going to go materially lower than where they already are? Okay, that's the idea. So we look at options on SOFR, and what do we see? So looking here, so this is the options chain for SOFR. Now, the thing that is noticeable is that if you look at the implied vol on upside, so for lower rates, you have that vol at around 50%, right? If we go to kind of the 10 delta, 10, 15 delta upside. So that's at around 50 vol. Whereas you look at similar delta downside, for higher rates, you've got that implied vol at like 23. So that's a material difference, right? 23 vol versus 50 vol, which means if you were going to buy calls and sell puts, you're going to pay up for that skew, which we don't really want to do, okay? So what we would rather do is